is behavior at the HOD or LOD. By now, I'm sure you know what we mean when we say LOD and HOD, right? So HOD, that's high of the day. LOD, that's low of the day. So what happens is the LOD is that there are sharp aggressive moves, and you should not get caught up in those moves. I will show you everything, but this is the last slide, then I'll go to the charts and we discuss that. So don't be caught up, wait for the setup to present. So you realize that when they move to the high of the day, they make aggressive moves of the stop hand, and then because they want to entice people into trading, they will make funny moves there. Just look at them and see whatever they are doing while you are looking at your setup. Focus on your setup. Don't care about whether they move up or down in the light. Focus on your setup. If you look at the price board, it will be flickering, changing colors, blue, red, and the like, as if there's a lot of stuff happening. But if you look at the price is almost at the same point, right? That means you are still there, right? And then, since we said we trade at the high of the day or the low of the day, we are still waiting for that setup to come out, right? So at the right time, when all the volatility has died down, you realize that they will start forming a proper M, a W, or an RR formation, right? And again, at that point, the spread, which is the difference between the bid and the ask price, will tend to widen. If you look at those notes, I think something like that is talked about there. So you realize that maybe when they were coming from these other areas, these two were close by, right? When they come to the high of the day, they increase the spread. Why do they do that? Because, you know, when you got to a level, let's say this level, there are people who do what are called depending orders. So they say, if it passes this point, it means it's going up, right? Now, if this is the ask price where the price is, the spread will be somewhere there, so that even if you had said, no, if it moves 10 pips from this point, then I should enter automatically, the spread will be widened so that they can pick that order and draw you into loss before you even do anything. So that's why we're saying they were picking or activating or hitting the stops. So you've put a stop order somewhere there, expecting that if it passes past there, then there's no way it's coming down. They will open the spread so that they reach that point, even if the price is still at a low point. So that's another characteristic of the high of the day, right? Then, if they have not trapped enough people, let's say they want to move down, that means their direction is a sell direction to us, right? Which means they will be buying from us. They want you to believe that it's a buy. So they will do all the tricks they can do so that you buy. They trap enough volumes so that they can move. Remember, their business is to make money, nothing more. They want to make money. Even if they take away $10 or $5 from you, it's okay, but they will be making the money cumulatively in the process. So what happens if there's not enough people there? Let's say, just for interest sake, let's say in the buy order, there's 500 million. These are the people who have bought, but they want to sell. Yet in the sell direction, there are maybe 600 million people who have sold, right? But their intended direction is a what? Is a sell. So what happens? They've tapped 500 million. If they sell at this point, they will lose 600 million, which means they will make a loss of 100 million. So what do? They move a step up. Maybe they trap another 300 million at that level. In their mathematics, it's now 800 against 600. So now if they disappoint this 800 million, and the 600 million will gain, then they make a profit of 200 million. So that is the only time when they move the market in their intended direction. If that does not happen, they would rather consolidate and wait and wait and wait and wait 2-3 days at the same price, because they have not captured enough people to make a profit. So what we are now saying is that you should not trade with the majority who will make the move in the opposite direction. So if you trade with those, the 500 million, right? Yet there's a 100 million in the other direction, they'll definitely go and reward the 100 million. So what our aim is to go into the smaller size, which when the market maker looks at this board, he's in a profit of 400 million if he goes on the sell, but will be at a loss of 400 million if he goes in the buy. Automatically, he will go into the sell direction so that he makes this 400 million. So that is the mentality that we'll be looking at, that, okay, if this move, it's a trap move, it's too good to be true. They are moving very fast, moving at 10 pips, candles, 10 pips, 10 pips, 5 pips, 15 pips. Ah, no, it's too much. You wait. They will finally settle. But believe you me, the majority of the traders, we have fallen into that trap, right? They have fallen into that trap. They have put their money. The market maker is looking at these books, and the balance is on the other side. Then you move in his intended direction. So the candlesticks will show shadows. That means at the eye of the day, you expect shadows to the top, bigger shadows to the top. Meaning to say the price is going up there, picking out orders and coming back quickly so that the people don't get a chance, right? So they go up again, pick up orders, come back quickly and close there. So where there are more pins or more shadows, we expect that to be the opposite direction of the trend. We'll see it when we look at the market, the chart. That is exactly what happens, right? So the zone, that is the HOD or LOD, should be worked 30 to 90 minutes or even 2 hours while they are working at that point. Remember, they want to accumulate enough orders to enable them to move in their intended direction. So don't think about any other things. Hey, there are more people are there today, they are selling because the USD is low and the like and the like. They are doing their mathematics there and forcing the price to move in their own direction. Remember, they are also buying and selling as we also buy and sell. So the market is very volatile, moving up and down. The board is flickering. When the volatility goes down, the flickering is now less, the market seems quiet, then it's time for you to enter. So they've done all their noise up and down and the like, they hit that point and the like, then they'll just make one pull out of the zone. After this pull out candle, normally they come back slightly up there, you enter your trade there, then you are very sure that you are going that far. Okay, we'll look at the reversal candles in our technical analysis so that you can see when to say now it's moving up or down. So they will leave that zone in one bar, 10 to 25 pips, showing the start of the trend. So some people say when they work the eye of the day, right? Maybe you get your pin there, right? Wait for them to move maybe 10 pips away from that pin. Then you know that they are moving. But that also depends on the size of the range in the HOD. But normally if they move 10 pips away from this zone, they've shifted in such a way that everyone who went wrong there is left at a loss. The reason why they come back slightly is to encourage these people to remain in the trade. Then they run away from them again, then their loss will be very large or they will have hit their stop losses. And that pull-out candle is also very important in most cases. If you observe the pull-out candle, you are in a good trade, and that will show you a lot of good results. Right. So now let's go to the charts and wrap up our system for today. Let me go to the charts. Right. So that is our market chart. I'm sure you can see it properly, right? So in technical analysis, we show you how we work around this. When I'm moving my cursor or my mouse, are you seeing the cursor there? Are you seeing the cursor when I move the mouse? Right. So what were we saying? We said we started H4, 4 hour, right? So in our 4 hour, what did we say? We said we are waiting to see the peak formations, right? So maybe we are here. Okay. Okay, let me just use anything. For this cycle, we can say we are here. We're at this point, right? That is our peak formation or our lowest point. And we are also observing that the highest point before that was here, right? Then we move back to our H1, right? So in our H1, you will see that there was trapped volume at this point. Let me add something. Right. So you can see that on Friday, they moved down and trapped people at that point. They moved down and trapped people at that point. Remember, I said they do their trap moves start of the week, end of the week, beginning of the week, beginning of a session, end of a session, beginning of the day, end of a day. So on Friday, they came here and trapped people there. So let's say we had observed this on Friday. We expect that they are most likely going to come back at the same level and do whatever they want to do. Then we move to the 15-minute chart. Let's say that's now a Monday after your weekend analysis. So on Monday, what do you do? On that Monday, we now measure our Asian session, first 8 hours, right? First 8 hours. If you look at that, being our first 8 hours, you realize that they've already made the move for that week. So what it means is they've already done their move. They've come in here around 6 o'clock. So when you come back, the trend is already going. It will be unwise to enter after that. Okay, you have missed the train. You have to look for another pay. Okay, but then if you look at this day, they made their stop and move and started rising there and there, even during the session. That means that is the behavior that they did. Why did they do that? Because they already trapped the people on Friday. They've trapped the people on Friday. So they don't want these people to come back and make a profit. So those who are trapped here, we have said the price is going down. And because of that, they've been trapped. Okay, let me remove other things so that we can put things that we use in this discussion. Right. So on this weekend, you have seen that the price has moved from here, right? Level 3 behavior, which I was talking about, it's very clear here. You can see that it's chaotic at that point, chaos, that region. You can see there's a lot of chaos. And that is a trademark for level 3. But if you look at this one, it then did its level 1. It did level 1 here, right? It did its level 1 here. Then level 2 and 3 were bunched up. If you look at it, level 2 and 3 were bunched up. It also happens that you have bunched up levels. So just level 1. If you look closely, you realize that you could say this was their level 2, but as it is, it was almost like a straight drop, right? Then they came to level 3. Again, if you zoom into that point again, you see that it's also a chaotic situation. The price is moving up and down in the light. Okay, let me just zoom back. If you look at this point, in this area, the price is moving up and down. It's chaotic. That shows you are at level 3. What you are waiting for is a W formation. So automatically, they came back here. Let me widen this one so that it can give a better mark. The price has come down here. Remember, we said we expect an W formation. So our expectation was that on Monday, they would come up, maybe meet 1 or 2 of the moving averages, come down again, and then go. So these are some of the formations I will show you how to deal with them as time goes on. So Monday, you see 1, 2, and 3, right? Then a midweek reversal, which was very small, into the next day. But now in the next day, remember, this is just level 1. We are expecting level 2 movement. What do they do here? Remember, I said their other 2 is time. Maybe they didn't trap enough people. What do? They consolidate. So they came down, gave us a small stop hand. This is the stop hand, moved up, came back again. This is the second leg, and we are expecting to go up all the way. What do? They consolidate. They consolidate, and they are still consolidating. That is the GBP/USD. No movement, chaotic behavior, more like level 3 behavior. And this is most likely followed by a reset. Sometimes they can move on, but you see that you can't trade in this area because there is nothing. But now in our mind, we know that we are expecting an upward movement. So let them do whatever they are doing. But for you, just say, okay, after all this has happened, I'm expecting the price to go up because they haven't shown me the second level. Okay? But then you can also come and make a measurement to see if what you are saying is true. That's 120. This is an ADR around 121. So it means it's one level. So I'm still waiting for them to show me a movement upwards. But in this case now, it will only make sense if they will move out of this region. Because this is a chaotic situation, you can enter and they hit you up and down because the price is making a lot of noise. But what am I waiting for? I'm waiting for them to go up. So when do I wait for these things to happen? After the Asian session, I expect a stop and low. It never came. This is now the New York session. They are doing a stop and low, right? If they create a perfect M out of this region, you might enter because it's also a better option. But for me, I would trade in this situation. I would let it run another clear level to level 3. Then I would come back and try to enter that setup. So those are some of the things which you should look at while you are running your trades. Okay. 4 hour, you are looking for the peak formations. Well, that is the one which will show you the actual extremes, right? Then after that, you go to the 1 hour. Okay, so 4 hour you measure and you mark. So according to me, this is the lowest level. You can see there's a W formation in the 4 hour. So I could safely say this was the lowest point. Then I go back to my 1 hour chart and try to see what movements happened after that. So I could say that was move number 1, consolidation, move number 2. This chaotic behavior automatically shows me that we are at level 3, right? We are at level 3 up to that point until they start showing another setup. So knowing my NZD, maybe it's around 80 to 90 pips. If these are 3, I expect something around 270 or 300. So that 329, so it means this is level 3. I can safely confirm that this is what? This is level 3. I mark it again. Now this now will give me a trading zone looking at it. So I zoom into that and check. This is a peak formation. They were just moving out of level 3. So maybe I would say this is my level 1. Then they retraced back, and this is my level 2. Then they retraced beyond level 2. That is a reset, right? But remember, because I have marked the level 1, I've marked another level 2. I'm still waiting for a level 3 in that pay. Remember, there are a lot of pays. Don't be married to a pay. There are a lot of pays to trade. I normally use the red for down. So I'm just setting this up. It's a bright that tomorrow I might be trading the setup or so. So I have to make sure it's perfect. Level 2, this was a reset, which also went level 1, level 2, and it's here. I am expecting it to go down, right? That is what I'm expecting. If it doesn't happen, I don't care. There are other pairs to look at. Why am I saying this? Because you might be forced to go into a wrong direction at this point. Sometimes they say if there's a reset, it confirms that the trend that it reset is still going. So you might realize that they might also actually give us 3 more levels from this point. They might actually give us three more levels from this point going down. That's why I'm saying, I would say, okay, this is what you are doing, but I'm still waiting for 1 level down. If it doesn't come, I would then wait for them to come back to this area to see that they actually reset the cycle. There are 2 things. They can reset a level like they did with level 2 here, or they can reset a cycle and actually come back there. So what I'm saying is for you not to get lost, don't be tempted to say, they are going up again. You are expecting a downward movement and that's it. If they don't move down, leave them alone. Okay. Now, when they are now changing direction, okay. So at this point, you see that the pins are more on the bottom side. it's a sign that they want to move up. When you start seeing pins at the top side, it means you're approaching a downward movement, right? At this point, a bit confused, but then as you go down again, the direction of the pins should start to change, right? So here they are throwing pins downward, which means this trend, they will actually come back again. And you go like this, there are no pins there, and there are no pins there, so it's not conclusive. But if you come to this point, again, the pins are starting to come to the top. It means they are also moving down. Just like here, that's why I'm saying I'm expecting to go down. The pins are still, again, coming to the top, right? So this is more pronounced now. You see the pins, the big pins are coming down there. The big pins are coming there, they are going up. The big pins are still coming here. It means they want to go up. When the pins start to go on the other side, it means there's a trend direction. Here they showed that there's a trend direction. Soon after the first move, there's a pin there. There's a pin there. It means soon after that, they are going to change direction. So they change direction again. At this point, the pins are starting to go on the other side. They change direction again. And at this point, it means they might just come down and maybe come back again because of that change in the direction of the pins. Those are important observations that you should see. And we are saying they normally happen at the low of the day and also at the high of the day, right? Those are the points where they show that kind of thing. Now, when I talk about flicking of the chart of the board, this is the board, right? Yeah, it's NZD-USD. Here, the board is not flickering too much. It means they are moving in their trend. We don't expect a reversal if the board is not flickering so much. Okay? But then when they want to trap movement, this will start flickering at a higher frequency, and you will see that they are moving away from there. So the issue of the high of the day and the low of the day is very, very important. And you see it here, they are marking the high of the day. There are a lot of pins there, right? Then after that, they took this point, come back, and they attempted to put it away. But if you look at it closely, you realize that this was the high point that they reached, and they never breached that point. So it confirms to you that that pin was marking the high of the day, and you could enter a trade here and move with it downwards. That was about 30 pips or so. But then it means they just gave us about half a cycle, then they reversed again. Those are some of the things that we'll be looking at. And now you see pins starting to come, then you know that they might be aiming for a reversal. So those are the behaviors at the high of the day, which I was talking about, right? As of now, I don't know if we have any concerns that you might want us to address. Unmute and discuss. Any issues on those charts? Okay. So the reason why I was saying you should open your platforms now is because starting from tomorrow morning around past 7, because we have a zone shift. So you'll be looking at the base of your chart. I don't know if you are using an Android app, you also see how to do. So you look at this part there. If you are on laptop, it will show you the time of the day when you are moving like that. When you see 8 o'clock, you realize that it will be around to us, will be around I think 7 o'clock. So around 7 o'clock, just go to your chart and observe your Asian session. Just go there, draw the box, right? You have your count, then you give us your projected direction. Right? So for this one, you can see that I had projected the movement long back, that is going to move down, but we're still waiting for it to really move down before I could say now we have a setup. So that is also what I'm expecting from you, that you mark that region and wait. Then after that, around 10, okay, around 10 o'clock, that means it will be 9 o'clock on our side, but if you look on that, it will be around 10, you go and mark the shadow that the 10 o'clock pin makes. You go and mark it. Again, or any pin that you think it is set the eye of the day. For this one, you would have marked this one, but then it will not have given you the M. It just will come here when it was supposed to retest here, it passed. So you have to adjust your analysis and focus on the next high that it sets. And again, wait for it to be tested. In this case, it was tested, which would be a better confirmation that the trend is starting to move downwards. Do that tomorrow. If you are on demo, the last pin is this one. Wait for the next candle to close below the pin, then you enter your trade. Then you see what happens. You share your feedback on the Zoom group. You don't want to talk with other people, things that happened in the absence. So on the Zoom group, you can show us your markups, what you have analyzed, and we can help each other like that. So for today, that's enough. Thanks, guys.
Okay, fine, sir.